the junior gold market is about to break out. This is a perfect time to position yourself in companies that you think can benefit from this development. Today I'm talking to Luke Reinehr. He's the executive chairman of a company called Kalamazoo Resources. And Kalamazoo just released a news release that the company is going to keep their Ashburton gold project. And Luke, first of all, thank you very much for your time. We are going to talk about the whole story and the potential upside now for the company. 1.5 years ago, De Grey Mining approached you and acquired the option to maybe acquire your Ashburton gold project. They paid $3 million up front, and now you had a $30 million deal on the table. Since you did this deal, the gold price in Australian dollar terms went up by $2,000, and I think it's more than $1,200 in US dollar terms. So my first question is, are you happy to keep the project, or are you a little bit upset that it didn't work out as you have expected?
Thank you, Jan, and good to be with you. Look, we're very positive, Jan, about this development. You're absolutely right about the history of it. The Ashburton project in the Pilbara is a substantial project. It's 1.4 million ounces at a very good gold grade of 2.85 grams a tonne. As you mentioned, we did enter into an option agreement with the very large gold mining company, De Grey Mining. That was back in February last year. And that was to actually sell the project. We granted De Grey an option for them to purchase that project for $33 million Australian. They paid a $3 million signing fee, non-refundable signing fee. And then they needed and asked for up to 18 months to do some due diligence work, to do some extra drilling, some metallurgical work, and we granted that time. However, two things have happened since then. The first one is the gold price when we entered into that option with De Grey was in Australian dollar terms $3,100. Today it's $5,100. So that's an extra $2,000 an ounce. And that has changed the dynamics completely as to this project. But the second thing that happened was that, unbeknown to us and to many people, De Grey was then taken over by Australia's largest gold mining company, a company called Northern Star Resources. And that was completed in May this year, just a couple of months ago. And that was in excess of $5 billion. And the reason why Northern Star have taken over De Grey is De Grey have a very substantial undeveloped gold project called the Hemi Gold Project in the Pilbara as well. And it's more than 11 million ounces. And De Grey, in the process of starting to build a very extensive processing plant to then develop this project, which will become one of Australia's largest gold projects. And that's why Northern Star took over De Grey. So, of course, by Northern Star taking over De Grey, they actually assumed the option to then acquire the Ashburton gold project. And look, we've only been advised in the last day or two that Northern Star have elected not to exercise their option in regard to purchasing the Ashburton gold project. And that's primarily because their key focus now is just building this gold plant at Hemi, which they've purchased from De Grey. That's what they're focused on. The Ashburton, even though it's a big project, is another project that's not what was their core focus. So, look, they've been very supportive of us. They're supporting this project going forward, and the reason for that is, ironically, we actually bought this project in the first place from Northern Star, so they know the project very well, and they want to see it get into development. But also, they have a royalty over the project that they're looking now to actually, I guess, piggyback on our success. If we can get this project developed, they've got a financial interest in it. So they've been very supportive. They like the project. They think it's got great potential for both exploration and development. But more importantly, as I guess a show of good faith, they're giving us all the information and data that they and Northern Star have established and studies over the last 18-month period during this option period. So that's a terrific bonus for us and gives us a real head start in putting together a scoping study, which is our next stage.
Very good. Thank you very much, Luke. And I think in the end, you didn't lose anything, right? You still have to keep the $3 million that De Grey paid you up front. You used that money to develop the company. And secondly, you also now get all the data that De Grey and Northern Star did, and you get all the information and the development of the project basically for free. And I think that's also very good on your end. And as you said, you have to keep a very good gold project. Your company is still valued below 30 million Australian dollars, and you have 1.5 million of ounces in the ground in a very good jurisdiction. I think that's very good. But now we should look into the future, right? You said you could develop the project, but obviously another question would be, is there an alternative buyer for your project? I mean, as I said, it's very good. There are not so many in Australia in this type of scale, if you like. Do you think there's anybody else interested?
You're absolutely right as to the scale of this project. And this is one of the largest undeveloped gold projects in Australia. So look, we think that it certainly will garner the attention of a lot of other companies. There's been a lot of merger and acquisition activity in the Australian market in the last 6 months, and that's driven by the very high gold price. So look, we'll see, but we think the key for us, Jan, is to progress this project as quickly as possible so that anyone can see the true value in it going forward. And so what we've decided to do we've commenced a scoping study, and just to explain perhaps to your viewers, a scoping study is the next stage or before you go into a pre-feasibility study, and it will actually then determine what's the optimal development and financing pathway for a project of this scale. And because we have all this information and data now coming from Northern Star and De Grey, that gives us a real head start. We've already appointed a number of consulting groups to assist us. And importantly, who's going to be our project manager with this scoping study is a chap called Simon Coyle. And Simon, very experienced in this area. He was previously the general manager of operations for Pilbara Minerals, which is one of our largest and one of the world's largest lithium companies. So Simon's got great experience. So we're going to progress that scoping study very, very quickly. In great detail, and we expect it to be released now in Q4 of this year, so in a couple of months' time.
That's very good. And I think scoping study gives you another advantage, right? It shows at these gold prices the numbers that people have to watch for this project. I think this could unlock value. And if we think of the so-called Lassonde curve, right? You have a project, you give it a value, and every time there is a checkbox tick, basically, you can give more value in the terms of valuation from a banking perspective. So that might also be an upside potential here for Kalamazoo. And just mentioning it, there are other companies in Australia that have progressed their projects towards a scoping study, a feasibility study, and that has given real upside within the last 1 or 2 years with these rising gold prices. So let's see what the time will show us. But for the end, Luke, let's also switch to the whole company, Kalamazoo Resources, because you also have other projects that you are developing. And one of your projects also holds a little bit of antimony potential. And I think antimony is in everybody's mouths right now. Can you give us an idea of the potential and the relevance of this project for Kalamazoo?
Yeah, absolutely, Jan. So we've got 2 projects in Victoria, which is the other side of Australia, which have a gold antimony focus. One is called South Muckleford, where we've been drilling previously. The other one is what we call the Mount Piper project. The Mount Piper project is very interesting because on our southern border, we have a company called Southern Cross Gold. It's got a very substantial gold and antimony discovery there. It's gone from being quite a small junior to, I think, a market cap of about $1.5 billion Australian. And so that's just on our southern border. And then to the north of us is another project owned by a company called Mandalay Resources, and that's a gold antimony project as well. It's one of the highest grade gold antimony projects in the world. So we're in the right area, the right region. We've got to do some more drilling and exploration, but there's no doubt that our focus in the last probably 6 to 12 months has been, one, doing that Kali Metals lithium spin out, where we gave our shareholders shares in the project, and we've kept 20%. But also in regard to the Ashburton project as well, to get to this stage of whether we were going to receive $30 million on the exercise of the option or take it to the next stage by ourselves. So we want to get back into Victoria. We want to do some more drilling, and I guess, as we get revalued. But that's something that we'll very much focus on.
Very good. And Luke, we now talked about developments, the company. Let's talk about the shareholders, if you like, right? Because you are also a very big shareholder with your family. You are invested very deeply into Kalamazoo resources. This is what I also like as an investor, if the people have skin in the game, as we say, and you certainly have that. So maybe you can summarize for the shareholders, including yourself, the upside potential you see for the company within the next few months.
I think it's very significant, Jan. And again, the gold price is what changes this. You can imagine an extra $2,000 an ounce of potential, cash flow on a project of 1.5 million ounces. I think people can do the math on that if you can get the project up and running. But importantly, I guess if you look at the near term, what we've done, and I think your customers and clients can look at this over the next couple of days with our ASX announcement that we've just put out, is we've done what we call a peer comparison. And that is we've looked at 10 companies that are very similar to us at the similar stage of scoping study or pre-feasibility or getting into production, but are of the same scale in regard to the number of ounces. And if you take an average EV or valuation of that, which is an enterprise value less cash, the average valuation of our 10 peers, I think it's 10, is sitting around about $98 per resource ounce. Kalamazoo is currently sitting at $17. So our view is that if the scoping study shows the right optimal pathway and we go to the next stage, that there is a real chance of a re-rate going forward. And that's particularly the case here in Australia because there's a fair bit of merger and activity happening at the moment in regard to gold projects because projects of this scale don't come along all that often. And now, because of the gold price, it gives us a pathway to develop. So we've got a fair bit of work to do, but we think we can get this scoping study completed pretty quickly, and that'll give everyone a clear vision as to what the future holds.
Very good. Just to confirm, Luke, are we talking about Aussie dollar, $17 or US dollar? Aussie dollar. Okay, so that's very good to know. Thank you very much, Luke. I think there is a lot of upside potential for the company in the future. As you said in the beginning, there are obviously two ways in looking at these current developments. Obviously, it would be easier basically for everybody just to take the cash and have the cash into the company. But now you have the opportunity in these market environments to develop a very good project in Australia. And I wish you the best of luck for the future. And we touch base soon and talk about the developments. Thank you very much for your time.
Your interest, Jan.
Thank you.